Hi, how's everybody doing? Hope you're well. Look forward to seeing more of you soon. But it's a good time to regroup here. It's been a while since I've spoken to you at length here. Been seeing a lot of you more recently, and again, hope to see a lot more of you soon. I know we're doing a client event here coming up in the fall, so I hope to see all of you then. But I thought it was a good time now. We're in the middle of the year around June, and kind of a halftime report, what's been going on, what's happening with a lot of issues. What's the Federal Reserve thinking? What about taxes? What is this Biden administration talking about relative to income taxes? Inflation is a concern that a lot of you have and that I'm concerned about. And kind of forecasting, what are the pitfalls going forward in the marketplace. So let's start with the Federal Reserve. So just this last week here, the Federal Reserve, Jay Powell, the Federal Reserve Chairman, just had what's called their FOMC meeting. What he did, the market didn't really like it for a couple of days, but he reaffirmed, which is kind of funny, that they're going to raise rates in 2023. Now, I mean, that's kind of ridiculous, talking about 2 years from now and the market reacting negatively to that, but that's what did happen. I will tell you, the last time the Federal Reserve raised rates was 2018. The market proceeded to crash 20% very rapidly. I will tell you the Federal Reserve will be very, very slow to raise rates. So just forecasting 2 years out and having a little negative market reaction is actually kind of funny. But the point is that I will tell you just the tone of the Federal Reserve is they're really willing to let inflation run hot and higher. We'll talk about that, which I don't think is a bad idea. But their ability to control inflation is another story. So he acknowledged, he's been saying, Jay Powell has been saying that inflation is going to be transitory because we're coming from a place of low inflation. When you have really deflation in the throes of COVID in March, April, May, the first and second quarter of 2020, it's called base effect. So we're starting from a baseline of here and you move up, you're going to have higher inflation relative to where you started, right? So that doesn't mean it's going to be permanently higher. But he acknowledged even that inflation is a little more persistent than he originally thought. I agree with that. So we have to be careful with that. So, talking about inflation, things are more expensive. I mean, look at home prices are up, I think, in San Diego, 20% year over year. Nationwide, almost across the country, you're seeing home prices in the double digits in the last year. Food and energy costs are higher. We had our largest CPI print year over year last May, from May 2020 to May 2021, of 5% in the consumer price index. That's high. That's the highest since 2008, and some of these readings are the highest they've been since 1992. So inflation's real. Again, you have corn prices up 60%, lumber price in the last year up 100%, gas prices are higher. Everything you can imagine, you see at the grocery store, the gas pump, those types of things, home prices. So inflation is a real issue. It probably is temporary as far as this type of inflation. Used car prices up 40-50%. Just buying a car right now is difficult. So, inflation's concern, where it's concerning from an investment standpoint, particularly, is in the bond market. If you have 5% inflation, you have yields on a 10-year Treasury bond of 1.5%. That's a negative rate of return of 3.5%. Now, we don't use bonds as a big portion of our portfolio. I think our biggest percentage for any client is going to be 5 or 10%, maybe, on the bond side of the portfolio. So the fact is that we're using other things to reduce risk and create cash flow. So bonds, if clients that own 50-60% bonds in their portfolios, which we don't, that's where that can be a major problem. And so inflation, real estate can be a good hedge against inflation, dividend paying stocks, those types of things. But I think the persistency of inflation at this level is probably not going to stay. But I do think there's some underpinnings of inflation that will be higher. We were been sub 2% inflation for a decade, and the Federal Reserve wants to be around 2.5%. So again, concern that I have. Not worried about it at this moment in time, but we're always doing everything we can to protect against the purchasing power that we have for you as clients. Another issue that I'm concerned about going forward is taxes. So we don't know right now. The Biden administration in the Senate and the House, which is controlled by the Democrats, who are looking to raise taxes. We don't know yet what's going to happen in the end as far as what actually passes. And so there's lots of things floating out there. A lot of it will not affect you. Most of you, some will. They're talking about capital gains taxes at ordinary income tax rates if you make over $1 million a year. Well, most of you don't have that kind of income. My bigger concern is step up in basis, meaning that if you bought a property for $100,000 and now it's worth $200,000 and you pass away, then your children have to pay the taxes on that step up in basis, where today you get a step up, where if you bought a house for $100,000, now it's worth $200,000, you now don't pay tax because that new basis gets stepped up and your kids inherit the property for that $200,000. So that's a major concern I have, is step up in basis. Also with real estate, 1031 exchanges, basically the IRS and the government allow you to exchange real estate if you own rental property into another property without paying taxes and deferring the capital gains tax, and therefore your kids not having to pay the tax. That's on the table as well, as far as eliminating for certain income thresholds the 1031 exchange. So that's a concern of mine. Another one is the estate tax. Right now, the estate tax exemption is $11 million, a really big number per spouse. They're really looking seriously at reducing that down to $3.5 million, which can impact clients. So estate planning is going to come back in the forefront for certain clients, to where we have to start looking at how do we mitigate the potential tax liability to the estate. So there's a lot of things happening. Now, nothing is set in stone yet. Nothing has been passed, but we're keeping an eye on all these things. And when this does happen, when whatever tax reform does come through the Senate and the House and the President, we'll be on it. We're going to do a special webinar on that, maybe even a full-blown workshop. I'm not sure yet, but we will deal with that head on. And then the last thing I want to talk about is going forward with the market. So, obviously we're at very high, valuations in any way you want to look at it. One of my favorites called the Buffett indicator, and talks about, the market value relative to GDP. We're at about 200%. Meaning that the stock market is valued at 200% of what the value of the goods and services we're producing. You want to be around 100%, kind of 1-to-1. So, there's lots of different indicators. What's keeping the market high as well as low interest rates. So as long as that holds, I think until the Federal Reserve starts talking about tapering, which means, raising rates, reducing the amount of stimulus. Right now there's $120 billion a month that's being purchased, asset purchases, which are, treasury bonds, mortgage-backed securities, corporate bonds. They're still kind of in emergency mode. That's a big number. And so until that changes, which could be sooner than later, you're going to see the market continue to probably grind higher. We're coming into, the third and fourth quarter, which can be more volatile. I would expect more volatility. But other than that, nothing's really changed for us in our portfolios. We're always looking at protecting capital, creating cash flow for you. So if you want to reach out to me, talk with me, I'm looking forward to doing reviews with some of you and seeing you all soon. So take care and God bless.